Hello, everybody. So you win some, you lose some with Tesla being down today as expected, sell the news event, and with MicroStrategy being up today as expected, but not so soon. I didn't expect this MicroStrategy stock to run so soon. I mean, 12% today again. I mean, we might be entering some sort of a short squeeze, as they say, a form of price discovery now, because we are above all-time high. So any new high we make is a new number, right? It's in price discovery mode. We've passed all-time high for MicroStrategy, and that is because the market is slowly realizing that MicroStrategy's strategy is actually working. And what is their strategy? Again, I've covered it many times in my video. It's a strategy of you short the US dollar by borrowing money, and you buy Bitcoin with the borrowed money, and of course you convert that money that you borrowed, those bonds that you issued, you convert them to shares at a price later on, at a price that will be much lower than the presumed price of MicroStrategy because of the increase in Bitcoin. So you actively short the US dollar. And when you short it, the money that you take, because you short the US dollar by borrowing money, the borrowed money, you put it into the next asset, which is Bitcoin, which is the world reserve asset. At least how in the era of the internet, I see Bitcoin as a world reserve asset, and I think that's where we're headed. That's why MicroStrategy is my largest position now. With Tesla being down 7% and my options on Tesla being down, MicroStrategy is my largest position. It's becoming a little insane. The strategy, again, I've highlighted that in many videos, is you dilute the share. So what did they do? They diluted the share. They diluted by 10%. Keep in mind that dilution will happen in the future. When those bonds convert, they diluted by 10%, but they grew the pie of Bitcoin by 29%. This is accretive share issuance, accretive dilution. And of course, the stock is up on this news mainly. MicroStrategy CEO Michael Saylor talking to analysts, telling them that they target to become a Bitcoin bank, and they hope to reach $1 trillion valuation when they become a Bitcoin bank, and they hope to have $100 to $150 billion of Bitcoin on the balance sheet. They're not there yet, but if Bitcoin goes up, they will get there, right, in terms of value. And of course, this is a controversial thing to say, but this all started, you may remember, 3 weeks ago when Michael Saylor was on the Safe Dean podcast, and he was talking about how they were going to earn yield on the Bitcoin. And this is, for Bitcoin maximalists, this is sort of a heresy. You're not supposed to say you want to earn yield of your Bitcoin. And I highlighted that controversy in this video. I talk about it very clearly. There's ways that you can earn yield on Bitcoin. It's just that you're not going to be lending it at 3%. This is not going to be a 3% mortgage. This is going to be very expensive loans. Hard money loans back before the days of double entry accounting, back before the days of the Italian bankers in the 1500s who lent more money than they had in the banks. This is kind of a return to, what I would like to call, what I will call a medieval form of banking, which is hard money banking, hard money lending. And if they get there, it's, to me, it's possible, and I see this coming, and I'm not selling. I am not selling my MicroStrategy, even though it's funny. That's why having a diversified portfolio is important to protect you from your own mistake. I repeat all the time, my own mistake is, I sold Nvidia. I made a nice profit of Nvidia. I was very happy with my profit on Nvidia, and then Nvidia keeps running, right? You think I'm going to sell my Palantir right now? I'm not selling my Palantir. I'm not making that mistake again. And you make a mistake. In my case, that was Nvidia. You think I'm making that mistake on MicroStrategy? No, I am not selling my MicroStrategy. And we don't really know how many hedge funds have short positions on MicroStrategy. A lot of them have played this arbitrage, this idea that MicroStrategy is going to trade on a one-to-one Bitcoin value to the Bitcoin on the balance sheet. They're going to trade on one-to-one, not on a premium. I believe they're going to have a premium. Every single company has a premium on their asset. Every single company has a premium on their asset. Even banks often, and this is hard to understand, but even banks often have a premium on their book value, which is the melting US dollar. So you're going to have a premium on the Bitcoin on the balance sheet, in my view. And that's because companies are active risk takers. They are being active with the Bitcoin. It is not the Bitcoin commodity just sitting on the balance sheet. They're going to turn on profitability through things like putting it on other layer ones, through things like backing stable coins, through things like lending it, but lending it at extremely high rates, not at the rates of today. And I in this video, I talk about what's going to happen if they lend to too big to fail institutions. Like, right? What if you're a Bitcoin bank lending to other bank and you're lending to a too big to fail institution? Is there really that much risk, right? Because if the bank can't repay your Bitcoin and it's a too big to fail institution, you're lending to a government at this point. And so we are in this blurry area of finance that is becoming clearer and clearer year after year. And I am so amazed by the performance of a strategy. MicroStrategy this year has performed 2.5 times more than NVIDIA, and that's this year. And of course, if you look at ever since they adopted their Bitcoin strategy, they have outperformed NVIDIA. This is so reminiscent of the days where I wasn't investing yet, but the days of a .com in the 90s when every single company was changing its name to .com. And of course, there was a valley of despair after 2000, but, internet delivered much more than it was promised to deliver. And, we're going to go through booms and busts with Bitcoin. We've gone through many of them. This is just the beginning of a new cycle. There will be a bear market, but we've just started the bull market now. And I think this is going to be a beautiful 2025 coming up and a beautiful end of the year after the election. I'm placing a lot of hopes of what's going to happen after the election. So anyways, this is MicroStrategy, big winner today, and I can't wait to see what it does in the next coming days. So you win some, you lose some. Let me talk about Enphase. And Enphase is, it's this range rider type company. I mean, the stock hasn't done anything in a year, and that's the point. Ask people who have owned Tesla pre-2019. The stock did nothing for like 5 years, and this is how these companies work. They do nothing, sometimes for half a decade, and then you get a step change in the valuation. And I believe Enphase has already gone through those step changes in valuation twice, and they will again, in my view. That's why I hold Enphase. Enphase fell in sympathy with First Solar, because First Solar is a seller of solar panels, right? Unrelated to microinverters, right? These you install under Chinese panels. There's not a single issue. Solar panels are a commodity. Anyways, First Solar had a downgrade by an analyst, and Enphase fell in sympathy yesterday, and it has been falling in sympathy yesterday because, Enphase, that's solar, solar panels, microinverters, it's all the same bucket, right? And so you understand, of course, the hard time that I have explaining the difference between microinverters and string inverters, and why are microinverters the solution of the future and not string inverters. And, I've done perhaps hours of videos on the difference between the two. Do you think the news is going to highlight, right? A, the difference between an inverter and a solar panel. B, the difference between a microinverter like Enphase and a string inverter like SolarEdge. Do you think the news is going to go into these minute differences? No, they're not. They're doing the same thing to Tesla, right? Tesla is just a car company. Right? It's the same story over and over again. Anyways, I believe in Enphase. It's a core holding for me. Why do I believe in Enphase so much? Microinverters are the superior tech. And by the way, if you're interested in what I'm going to say here, I recreated my long analysis, my monologue. I recreated it on Enphase best solar stock. Kind of sad this video only got 1,900 views considering how long it took me to write it. But this is an hour of kind of like my full thesis on Enphase, point by point by point, where I go through all of these points. It's kind of a redo of my first video that I had made on Enphase a year and a half ago, where I explained everything, which was a 90-minute video. Anyways, I should make TikTok videos. The point is, microinverters, very superior tech. B, do you believe IRA subsidies are going to remain in place into 2033? I believe they will. No matter what the outcome of the election is going to be right now, I believe they will. Some people are arguing that there will be a potential candidate, namely the Republican side, that would remove the IRA subsidies. I am sorry, I don't think that's going to happen. Tesla benefits greatly from these IRA subsidies, and Tesla's CEO is siding with the Republicans, and he's supporting the Republicans. So do you really think they're going to go after the one company that's going to benefit out of the support? I don't think they're going to go after. Like, I think this is plus not even, so I think it's a win-win for Enphase or Tesla on that one, on the subsidies and the subsidies staying, and because, of course, the other side, of course, they don't like Elon Musk, but they wouldn't remove the IRA subsidies either, because that's their bread and butter, the environment. So I don't think that's going away. Not to mention laws in the United States. This is not like Europe. They don't change that easily, the laws around here. You gotta get all three houses aligned. And remember, the Senate in the United States is 60 votes. You gotta get 60% in the Senate to get anything done, not 50%. Like in most democracies. The U.S. is not a democracy. It's a republic. So you gotta get 60 votes. Like, I don't think that's gonna get repealed. That's why the U.S. is a very stable country. Few things ever change. Few things ever get passed. And I will point out to the tariffs, all of the tariffs that were placed in 2019 by the Trump administration, they stayed on during the Biden administration. I'm finished with my analysis on ELF stock, ELF Beauty, ELF. Yeah, they've been paying 25% tariff on Chinese makeup imported to the US since 2019, and that hasn't changed. This is the policies are just, the US is a stable country. It's a beacon of stability. I do not believe this is going to change. And that's why, if you really, really think about it, these IRA subsidies were not designed properly. I go in depth into this. They're not designed properly. I make the prediction that when Enphase moves to gallium nitride microinverters, GaN microinverters, which will allow them to greatly improve the capacity of these microinverters, the subsidy that they get, the 11 cents per watt AC that they get, will cover the entire cost of making the product. Like you could make the case that you could have a company who could just make Enphase microinverters, have them sit in a warehouse just because they make more subsidies. They've been misdesigned, and the subsidies have not been designed properly. And this is something that I've seen in Europe back in 2007, 2008, when they had poorly designed, in Spain, in France, they had poorly designed subsidies on solar, such that you ended up people making projects with return on investment of 80% a year guaranteed by the state for 20 years. So these have been poorly designed, and the market, of course, is not recognizing it. And even if it were to be removed, even if the subsidies were to be removed, I believe, just like Musk, that this doesn't need the subsidies. Enphase doesn't need the subsidies. Electric cars do not need the subsidies. It's the cherry on the cake. We don't need them because this is just a vastly superior technology. It's energy independence. It's more energy than you need. It's gathering energy from the sun. It's shielding yourself against the increases in utility prices and against the incompetence often of grids, and you running out of power. So moving on. Do you believe for Enphase that sales will pick up as soon as interest rates drop? I believe so. Once interest rates drop, in my view, sales will pick up for a company like Enphase. Lastly, solar gets more compelling as utility prices keep rising, and they will keep rising. Like, I make no mistake about this. They will keep rising because that energy is going to be bid up by AI. There's going to be a lot of people bidding up the cost of energy for AI, which means that residential electric prices are going to go up quite a bit. And if you live in a world where, I don't know, the price per kilowatt hour is something like 50 cents, which may be coming in 2 to 3 years, if you live in that world, then I don't see a scenario where solar doesn't make sense. I mean, I just don't. And as folks get EV, as you get electric vehicles, that makes even more sense, right? Like today, if you're a household and you have 2 cars and you have 2 gas cars, it's much less compelling. But if you have 2 EVs, all of a sudden you don't even get to pay way cheaper for charging your EV. You get it free. Not only it's not just cheaper than oil anymore, it's now free to charge your EV with your solar roof. So anyways, I find this extremely compelling. And of course, as the quality of the grid keeps dropping, I'm seeing it in my area. You think people are voting for those bonds to improve the grid? You think they trust that the grid is going to be improved? Like I see in my area, there's a lot of bonds going on, elections. People are saying, "Oh, we should improve the grid. Let's finance $4 billion to get a better grid." I don't think people are going to vote for that because they're not happy with the service they've been getting. So anyways, and even if they did improve the grid, it's going to take years, maybe even decades. So I see this disruption big as day. I'm very happy. Sorry about that. So I was saying, I don't think this opportunity is going away anytime soon. So now we will be talking about, just a second. Now we will be talking. Okay, I got it. Now we will be talking about Tesla. So let's talk about Tesla. Tesla is down between 7 and 8% today, depending on how you look at. I took the 6 month view on the chart to show you that no, actually Tesla is up 27% over the past 6 months. Okay, it's the worst performance out of all of the Max 7 stocks, right? And some people say, oh, Tesla's not part of Max 7. In my view, it definitely is. Okay, so the performance hasn't been as good than a lot of people expect. And, me too, I haven't been too happy with the performance of Tesla. But Tesla is a post 2030 hold. It is a long-term hold. It's not like I'm buying Tesla on a bunch of margin, and if it doesn't get to 250 in 6 months, I'm going to be wiped out or something, right? Tesla is a very, very, very long-term hold. I actually think that the drop that happened we knew that was going to happen. I saw some statistics circulating on Twitter saying that in 90% of cases, the Tesla stock drops after an event, right? It's the sell the news event. And, surprise, surprise, Wall Street did not like the event. Tesla's robotaxi event is stunningly absent on detail. Like you knew whatever they were going to do, we knew the headlines were going to be bad. Like we knew it. We just knew the headlines were going to be bad, whatever they were going to do. And this has been the story of following Tesla stock for 5 years. And in fact, let me tell you, so one of the criticisms, and they would have found a criticism no matter what, don't worry. But today the criticism was, it was stunningly absent on details. And let me tell you one thing, I actually side with Tesla on that one, because I have spent the past 3 years listening to analysts complain about how Tesla missed on the Cybertruck, they missed on the pricing, they missed on the windows. The windows were supposed to be bulletproof. The windows didn't end up being bulletproof. They missed on the timing. They missed on the range. And I'm sure they found more things on which they missed. So So really, the more detail you're going to put out there, the more this is going to be fuel for the media to go after you and criticize you. So I'm actually glad they didn't give us many details. You also have some people who say, well, if you give a real date, and I agree with that statement, if you give an exact date as to when the robotaxi is coming out, and remember, these are going to be for sale. You're going to be able to buy these for yourself. If you give a date, then you're creating this Osborne effect where people are just going to wait until they upgrade and they're not going to buy the current models. So this is also why Apple makes product releases, kind of surprise product releases, and Apple never releases a product that's anticipated. It's always a surprise when Apple releases a product. Tesla's following something from that playbook. Tesla is also following, I think, the playbook on Apple. If you remember 2019, Apple stopped reporting shipments on their iPhone, and the market entirely freaked out because Apple realized, well, wait a minute, whenever I release how many iPhones I sell, you're just criticizing it and you're just killing my stock. So I'm going to stop giving you details on the number of shipments. I don't know if this would be possible for a company like Tesla to do that too on the number of cars that they sell. Could they actually not communicate too much on that number? I think if they did, that would also greatly benefit Tesla because we get insane volatility whenever we get the delivery numbers. So maybe they could go even further into giving us even less detail by removing how many cars they sell because. And of course, the funny thing about Apple is that from 2019, from the moment we removed that detail, the stock is up at 5x. That's the funny thing. So I'm actually not too worried about the fact that there's no details. I've had enough details. We see enough details, right? There's a Model 2. It's gonna look like this. It's not gonna be called the Model 2. It's gonna be called the Cybercab. And they did say that this would be available sometimes in 2026. And Elon said definitely before 2027. So again, 2026, what is that? That's between 14 months and 26 months from now that the Cybercab is available. We also know that they're going to use the Model 3 and the Model Y in order to launch their robotaxi service, and that will be in 2025. So that's all we know. And the competition, you may point to the competition and say, oh, Uber is partnering with Waymo. Well, first of all, is this just talk, right? How meaningful is this right now? Well, it's kind of like Tesla, right? It is exactly like Tesla. It is talk for now. It is not concrete. It is not concrete for Uber, and it is not concrete for Tesla either. This is something that will happen in the future. But I want to point out, partnering with Waymo, and do we believe that Waymo has the right technology for scaling self-driving? And again, I'm not. This is the same story as microinverters versus string inverters. This is camera vision versus camera vision in the case of Tesla versus LiDAR in the case of electric cars. Like this is the same story. This is the same debate, and in my view, I pick the side that vision it's so logical that it has to be only vision. I mean, we only drive with vision. Why couldn't the car only drive with vision? To me, it's extremely logical that we don't need all of these sensors, and that solution adopted by Waymo is not the right solution. And also, some people, are saying, oh, well, Tesla should have partnered with Uber or Lyft or whatever. I just want to point out that the only reason why Google's Waymo is likely partnering with Uber. The only reason is that they likely can't develop their own app. Like, could you think Uber could develop their app and put it on Android and just add the app on Android and say, hey, this is the Google app, and we develop the Google app? They would have so much antitrust if they did that. It's the same story as Microsoft putting Internet Explorer on their device. I don't think developing an app would be an option for Google, developing their own app and undercutting the competition. But it is definitely an option for Tesla. So that's why I think Tesla is going to develop its own app. And I also think they're going to develop their own app because we know that they are going to develop their own app. They told us that at the last announcement. They told us, right? People reveal, oh, we didn't learn much in this event. But we already knew it. We already knew the app is here. This is the app. They've shown us the app. They've shown us the mock-up. The app is coming. We know that was already known fact. And so they're going to launch their own app. They're going to do it with Model 3 and Model Y in Texas, in California, in 2025. We have the Model 2 now. We know what it's going to look like. It's not going to be called the Model 2. It's going to be called the Cybercab. And again, we have little details, but I think it's fair because I remember 3 years of them saying, oh, the Cybertruck's never coming, the Cybertruck never's coming, and criticizing on the details. So don't give us the details. At least you're creating a positive upside, a positive picture for the media to the upside. And lastly, the robot performance. Of course, Wall Street is dismissing robots. My guess is that they will keep dismissing robots probably until 2030. I am not dismissing robots. I was very impressed, actually. The best part of that presentation was after Elon Musk was done speaking and they actually filmed around with the camera. I want to show you two things. One thing is obviously, I mean, seriously, like you have an actual robot serving drinks at the bar, and you can see it's all pre-placed. It's sure, I mean, it's a specially designed drink, it's specially designed cups. It's done everything to accommodate the robot, but you still have a robot serving drinks at the bar, and there's a lot of debate as to whether these were auto-operated. I have no reason to believe that they were, because the way the robot was speaking was very similar to the way ChatGPT 4.0 is speaking. And if you go to the Sphere Las Vegas, I went there last week anyways, if you go to the Sphere Las Vegas, they have robots like that all across the entry hall of the Sphere, and you can communicate with them and talk to them in natural language. And it's a Chat GPT. I mean, in the case of Tesla, not Chat GPT, but it's a GPT model with voice is what it is, and it's extremely compelling. And yes, it imitates a human because it learns from human. But I see no reason why this was teleoperated. Imagine if they were to find that out, the stock would drop way, way more, or maybe it wouldn't because they ignore robot. I don't really know. I think what's even more compelling than that is the hand. So they were showing this hand at the end. When the presentation was over, they had this future robot hand, and it was moving. And this movement, I think they say something like 22 degrees of freedom. It moves like a human hand. It literally moves like a human hand, and that's the next gen, right? So. Again, very, very tough to wrap our heads around that. But they're working on the robots, and that's a big deal. That is a big deal. But it's going to show up in 2031, 2032 in the balance sheet. Are people really looking at that right now? No, because the market is so short term. So nobody takes this opportunity seriously because, again, it's too long term. The market is not taking it seriously. What I think the opportunities are right now for Tesla, what's compelling me to own the stock right now for Tesla is that, A, they are the uncontested leader in EV. Their share is actually going up. They had went down in the US to the high 50% market share. Now they are in the high 60%. Why is the share going up? Because the competition has given up at electric. They've given up with electric. As soon as they had the opportunity to slow down these plans because of the interest rates being high and people not buying cars, they mistook that for people not buying EVs, and they've just entirely given up. Tesla has grown its sales quarter to quarter. Quarter 24 from quarter 23, the growth rate on cars is 11%. The growth has not abated at Tesla. They keep growing their sales when the competition is down 20-30%. So that's an important one. They are the uncontested EV leader, in my view, and will they have 25% market share and 80% of the profits 10 years from now, like iPhone? I think so. So that's why I own Tesla. It's so obvious. Why cars rather than phones? Because cars are a much bigger market than phones. There's 2 billion cars around the world. Okay, maybe 1.8 billion. That's how much is up for grabs. If you get 25% of that market, it's insane the size that this company could achieve. EVs are the future. I believe EVs are the future. Why? Two reasons. One of them is very much cheaper to fuel, between $6, $7, maybe $8 to fuel a Model Y at home. right? And they are now at cost parity with gas cars. They will be cheaper than gas cars. Mark my words, because gas cars, I was watching this documentary about Stellantis recently. Stellantis' solution was to just raise prices, and now the cars are sitting on the lot. Nobody's buying the cars because they just raise the prices anyways. Interest rates dropping will lead to more sales. People will be more likely to borrow money when interest rates are dropping. This is the same story as Enphase. When you have interest rates this up, people borrow less. When interest rates are down, when we inevitably go back to a zero interest rate environment, when we do that, the cars, the sales will pick up. The bulky items, people will be in a mindset to buy bulky items because maybe their mortgage is back at under 3%. They're the uncontested leader in autonomy software. To me, that is obvious. I see it every day. And they are the uncontested leader in grid battery storage as well as Powerwall. I have always said when I talk about Enphase's battery development and their batteries that they sell, I have always said they are less popular than the Powerwall. The home battery that is popular is the Powerwall. That's why I think a solution like Enphase needs to mix and match, and they are mixing and matching with the Tesla product and the Tesla Powerwall. But the Powerwall is the leading product, and the Mega Pack that they sell are the leading product, and this is an opportunity that is happening right now. This is an opportunity that is growing at a 70 to 80% clip a year right now, right? Cars will pick back up. Mark my words. No financial advice. But I think cars will pick back up. I feel it. I see it. I see it every day when I drive around. I see these cars every day. I see them becoming more and more popular. And I live in Texas, perhaps the place you would think is the least likely to adopt that. So anyways, let me move on now to Celsius. So Celsius, as you know, I made a video when it was $28. I mean, I've been adding a lot in the 31, 32 range. Actually, is when I was adding. The point is, Celsius is up. The stock is up 20% in a matter of 5 days, right? Less than that. But why is it up today? Right, because it's been going up and up. Why is it up today? Well, because it turns out what I was saying, which is the sell-through at stores is still happening. It's just Pepsi who overstocked. They have 12 million cases too many. But aside from that, the sell-through at the store is still happening, and Celsius sell-through at the stores is up 13% in 4 weeks. Note how Monster is down 4% and Red Bull is down 1%. And Alani is up a whopping 78%. Now, Alani is a fully women-focused niche beverage, starting from a much, much, much lower base. I think it's important to keep an eye on Alani, right? Maybe it could be a threat to Celsius, but I don't think so, because Celsius is still a gender-neutral product. That is, I don't want to say, but Alani, I think is clearly targeted at fitness and women, kind of that circle is what I think. Also, I'll say this last thing, like I cannot understand how these stocks react for data that is 4 weeks. This is 4 weeks data. Why? How could you react on 4 weeks data? No, in my view, you should react on data for a longer time period, at least a year. You should see a year, or it's moving, or at the very least a quarter. 4 weeks is not enough. There could be tons of reasons that explain why Monster is down and why Celsius is up. There could be so many idiosyncrasies in this. So the stock is up. How the stock market is, it's very short term, but I'm still buying Celsius at this price. I still find it compelling at this price. So no investment advice. So lastly, let's talk about HIMS. Let's finish with HIMS. Another roller coaster stock. You see how the volatility is insane. I mean, the volatility is just, it's tough to talk about stocks every day. Sometimes I envy people who just run away from stocks for months and don't subject themselves to volatility. That's why it's stocks are not easy money. You have to go through the volatility and the roller coaster. So this stock up 10%, down 10%, up 10%, down 10%. The last time, so now it's back up, but it was down because people are saying that, oh, now it's Weight Watchers who are launching GLP-1s and they are now going to take a lot of the market from HIMS. So everybody's trying to catch up HIMS. Everybody's trying to take market share from HIMS. Never mind that GLP-1 is not a core business for HIMS. It's just their latest great offering, but they have a lot of other offerings. Initially, they got started with ED drugs. I will finish this video by quoting this tweet from Vinit Morkan, great tweet, and he was sharing the views on the website, and it gives us a good idea of scale. I mean, at 7.8 million, let me round it up to 8 million, and let me round up Teladoc, and let me round up LifeMD to 800,000. HIMS is one order of magnitude more traffic, right? One order of magnitude more traffic, and of course these short-term movements in traffic, they don't mean as much. It's the long term that means a lot to me. HIMS is down 3%. So I guess it's not really that bad, is it, right? LifeMD is down 11%, but it doesn't matter. It's too short-term to look at. The point is, in terms of order of magnitude, the competitors are way lower. And so thank you, Vinit, for sharing that. And I'm very happy to be a shareholder of HIMS. I'm not buying anymore because I'm more in 3x on my position, but it's a full position for me. And I think HIMS is in a winning position for the future of health and future of healthcare, and I've covered it a lot on the channel. If you follow the channel, you know what my views on HIMS are. And sorry, Weight Watchers, I think you have a long way to go in order to get to the level of volume that, say, a company like HIMS does. Anyways, this was not investment advice, no financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you for watching and have a wonderful, wonderful day.